Now, interest rates have gotten really stinking low. What are they? What are we talking when we say really stinking low, Joe?
Very low, like historic lows. We're approaching. It's
Spit out a number, Joe.
No, every year.
Quote it. Do it.
Every month we come in and we go, oh, the interest rates are great. They're still great. And
But
we're all
we're
waiting
solidly
for
in the threes, aren't we?
You should be somewhere in the threes.
Yeah.
Rebecca, I want to geek out real quick on some numbers. You ready?
Yes, let's do it. I
Okay.
want to see you geek out.
Because this is what I do. I do numbers. So if you're looking to build wealth, like we're all trying to build wealth, at some point you're trying to save your money, you're trying to expand your portfolio, so to say. Let's say you had $65,000 to invest, right? $65,000.
You got 65 grand in your 401k, or where do you have it? Mattress?
You got it. You've managed to save it up. You inherited it somehow. You've got $65,000 liquid.
Liquid cash.
Liquid cash.
Just won the lottery.
Not in your safe. That's bad.
Okay.
But if you took that $65,000 and let's say you had a 9% return, which would be very aggressive in the market, that would be a great
return.
That would be a great return. That would net you $58.50 per year, right? That's great. Now, if you took that same $65,000, you could purchase an investment property for $300,000 with 20% down, and we even got $5,000 for closing costs. And if that property appreciated 3%, it's $9,000 per year.
Okay,
Easily.
so time out. You said you're going to geek out, so I want to make sure this isn't above everybody's head. So you're comparing if you just had 65 grand like in an open, like some sort of money market account.
Sure, if you put it in some stocks, whatever.
9%. But if you look at putting it into real estate, what you're saying, and I have the stats right here to prove it.
A modest return of 3%.
Which our returns right now are much higher than 3%.
I don't want to say too much, but if we just said 3%, that's $9,000 versus $58.50 in real estate. And that's without any kind of cash flow opportunity. That's just straight year after year improvement should the market go up modestly.
So you're talking about 65,000 liquid. What about those folks that have a lot of equity in their properties, but to what we were talking about earlier, don't have anywhere to go, or they can't get the same value for what they could turn that money into? Do you see people taking money out of their existing?
I do. I
And
see.
then they can build wealth and
You're
legacy
talking about
through
doing
that.
a HELOC, aren't you?
So I see people ask me all the time,
Or a refi.
how can I unlock my equity? That's kind of a big question. So we'll do a lot of cash out refinances because again the rates are so low. So we'll be able to take out some money, and a lot of times these people are able to get really close to the same payment they had, and still pull out $65,000 to buy the next property,
to buy the next investment property,
to buy the next one,
and perhaps even stay in that same house or make that same house a rental property and take the cash out to buy another one that they want to live in.
A lot of people like to move up, and they say, okay, I want to move up, but what if I kept my other house? How can I get in? Well, you can get into your house for as little as 5% down. There's options out there. They're pretty aggressive. You have to qualify and all those kinds of disclaimers, but there are options and they're allowable. And the way the rents are going, you can most likely do both. In our business, we sell money, and everybody always needs money. Who doesn't need money?
Who doesn't need money?
And if I can lend you money somewhere in the 3% range, and you can do something that's going to make you more money with that money,
like 9% range,
Right.
like 9% range, or even greater, right, in an investment property, then it just makes financial sense to borrow money at that percent.